We're 3 years old. We're growing really fast. We have the world's largest consumer fund in the world investing in us,
Right.
which is L Catterton. And we have the head of the growth fund, Ian Friedman, as a board member. And Eric Donato is another partner there at L Catterton that are kind of leading the charge. For those that don't know, L Catterton has investments in over 100 brands.
Mm-hmm.
So there's a lot of strategic partnership and learnings from having them as a partner.
Right.
And then historically, Catterton was like a very storied consumer fund, and they merged with L, which is LVMH's previous like private equity entity that they used to have. So it is a very strategic partner for what we are doing.
Right.
And for us to have someone like that at this stage is like really, really special and game changing for us,
Right.
because it really puts us in pole position to just put our heads down and execute.
Cash.
Ladies and gentlemen, group chat.
Cash.
It's $1 trillion. Hot.
I'm in the bubble.
You're in the bubble. Welcome to the bubble.
Man, this sounds like some Illuminati stuff.
Yeah.
For the listener, we were talking about a new membership place that I just joined that apparently I'm not allowed to talk about. We just tried to talk about it and Dee stopped us.
Yeah.
I didn't know I wasn't allowed to talk about
So
it.
this is, we're trying to get you in the Illuminati.
That's when all these people like on TikTok make videos that go viral about the Illuminati. It's because of moments like this.
Yes.
You know, there's a video that went viral of DJ Academics talking about how Delilah is the Illuminati hangout, like in all seriousness. And it went viral. He's like, bro, I went to this place in LA. It's called Delilah. It's really unassuming. You walk in, it was Jay-Z, Steve Stout, blah, blah, blah. This person, that person. He's like, I found the Illuminati hangout. But he was serious. He wasn't joking.
He wasn't joking.
And it went super viral. So anyway, I'm not talking about Delilah, but I guess I'm in the Illuminati now.
Welcome.
Thank you.
It's great to be here.
It seems nice.
Yeah,
You know?
It's Delilah.
Yeah, right. It's literally.
I've been part of the Illuminati for years.
Right.
at the place you're
Right.
going to be at. I was there Tuesday night.
Illuminati?
Great dinner.
I will say I went to see it and I was in the elevator with a very Illuminati character,
Yeah.
right? Fresh out the gate.
Yeah. There you go.
So this is great. When do I get to meet Oprah and hear about how they start fires with laser beams?
And the babies.
Yeah. Okay. In all seriousness, here we are in person and we have a special start. So on the last episode, Dee, we gave you a big shout out.
I heard.
I don't know if
Thank
you listened. You just raised even more money just by the truckloads. You're bringing it in. We've talked about Ghost a lot on the pod, but why don't you give us some more insight? You're here with are you guys co-CEOs? What are
Yeah.
those?
We are.
Right. Okay, so we're here with both CEOs of Ghost.
Yeah. So with Josh Kaplan here, my co-founder, co-CEO.
Friend of the pod, been on before. You guys know him.
Yeah.
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 Tell us about it. I mean,
It's pretty cool because the company turns 3 basically in November.
wow.
It started November 2021. In fact, when we had started, we weren't incorporated or have a company name or basically an idea.
Right.
We had a rough idea, which is not what Ghost is today at all.
Right.
And we got very fortunate that
The Illuminati gave you money.
Illuminati, aka 2 early stage seeds funds, gave
Right.
us money.
Right.
This is honestly like this company feels a little Illuminati-ish.
Right. Right.
It does.
Because I mean, I feel like you guys feel like you've like broken some sort of record for fundraise in record time of something.
I think given that we are not an on-trend company, which right now, if you're an AI,
Right.
it's actually relatively easy to raise money.
Right.
We are a non-traditional concept
Right.
in an area which many technical people in Silicon Valley say that it is not technology and we are consumer.
Right.
Which that's why the richest man in the world is a Parisian, not someone from Silicon Valley. And what's interesting is that
You're saying Bernard Arnault.
Yeah. And the entire experience has happened so fast, and we don't even you don't even realize what the hell happened. It
Right.
just went so fast.
Right.
And and we kind of experienced this also at Young and Reckless. Like, you just go from 0 to 60 like this.
Right.
And all of a sudden you're like, whoa, what the hell just happened? And it's also easy when you're going that fast for the wheels to fall off. Right. So it's a combination of things. So like, for those, you guys touched on it in the last episode, and we've touched on it before, but broadly speaking, what we are doing is taking an industry that's been around for like 100 years, which is trading. Like, there's been traders. I mean, thousands of years, there's been traders, people buying and selling things.
But I would say almost as old as
Prostitution.
well, probably before. I'm guessing they were buying and selling like furs before people
That's true.
selling their bodies.
Food.
Yeah, it's like as old as like written, maybe earlier.
Yeah. And I think like people underestimate, even in today's world, that things are bought and sold all over the world in bulk in the most simplest form.
Right.
Like, we forget that, like, we just show up and there's things everywhere.
Right.
There's furniture, there's clothes, there's food, there's electronics, there's cars, but somebody is trading that. Someone's making it, someone's selling it, and someone's buying it, and then someone's consuming it. That like whole trading industry has just been around forever.
Right.
And what we found, what our wedge was, we realized coming out of COVID, just experiencing it ourselves with our own brands, that people just had way too much stuff.
Right.
So we really laser focused on excess inventory as our wedge to get the biggest brands and the biggest retailers to start working with us and start listing their inventory and being able to discreetly sell bulk inventory to not only discount retailers like your TJ Maxx's and those types of folks, but international retailers. And then what we call, and if you go on our website, you'll see like a complete new rebrand, is the resale economy.
Right.
And that's the future of retail. So the resale economy is people that sell on eBay and Amazon and StockX and Tmall and Coupang and whatnot, and all of these platforms that are emerging, as we see retailers struggle, right? Like Walgreens is closing a shitload of stores. CVS is closing a shitload of stores. The absolute number of goods being consumed is not shrinking.
Right.
It's growing.
So the question I have, and Josh could probably answer this, like you guys aren't a brokerage business. So how does a tech involve in how you guys match buyers and sellers?
Yeah, that's a great question, Anand. I think the best way to explain it is you think about Uber in the early days, Airbnb in the early days. Uber could have built a platform for taxi companies to run their businesses more effectively, more efficiently. Airbnb could have created better software for hotels. And instead, where they really focused was pulling out the insight of what people were using these resources for. So taxi companies and black car companies, people needed rides. And hospitality companies, people needed nights where they could stay somewhere. And that was their atomic unit, right? A ride, a night. And what we've been able to do is take our atomic unit, which is this lot of stuff, right? And create the infrastructure to allow those to move across the world seamlessly. And so in the same way that Uber, you can push a button and a car comes, or for Airbnb, anywhere in the world, you could opportunistically find a place to stay. What we've done is we've created the infrastructure where you could opportunistically buy and sell goods instantly. And the alternative to that is incredibly complex and very time consuming. And it starts with listing that inventory into the ecosystem, right? So today, if you're Levi's or if you're Nike or if you're Crate and Barrel and you have products you want to sell, you have to find someone to buy them, right? And when you find those people, you're sending them PDFs and spreadsheets and photos and documentation, all of these things that are very manual, very arduous process. So we've created an enormous amount of software that makes that listing process quite seamless, right? A standardized format across every single category of every single product. And then the next step is being able to identify the distribution, right? If I am a wholesaler trying to put athletic clothes out into South America, it's going to be incredibly difficult for me unless I have pre-existing relationships, unless I take a fly down to Panama or Argentina and get in the room with people that have to answer my phone call in order to do so. And so what we've built is a network of thousands of different buyers throughout the world that we can match inventory with instantly. And the last stage of the process, which is also incredibly complex, is the negotiation, right? What is this product worth to whom, at what point in time, and how can you then get that product from A to B? And so we've invested significantly in being able to not only help with that negotiation process, being able to show what the market price is of these products, being able to very instantly explain to a seller, this is a good offer or a bad offer, to a buyer, this is worth more in this channel than it is in another channel. But also being able to integrate with freight forwarding, dock to dock, insurance, taxes and duties across international shipments, all of the resources that are required for you to get product from A to B.
So another question I have is, Dee and I went on a road show for 5-4 and we failed. So tell me your different experiences of trying to raise like large capital of money.
Yeah.
And, and it was really like struggling for us. Like it sucked.
So there was a couple things that was challenging. The timing also has to be right when you're raising money or selling a business. And I would say that the timing of when 5-4 went out wasn't the best of times for consumer businesses. But the bigger challenge was the business model for what we were doing, which was subscription at that time, did have a flaw in it, right? Like it was a TAM that you could potentially churn out of over time. And that's been proven for consumer subscription businesses that are not digital, that you can actually go through all of your customer file. And everyone has kind of gone through that pain as a subscription box. So it's a very different business. And to investors' credit, a lot of investors saw that as writing on the wall. The big difference here is the TAM is enormous. So we sell apparel, footwear, beauty, home, toys, electronics, home goods, and it's branded goods all over the world. And it's not beholden to a single category. It's actually beholden to whatever supply and demand that's available. So think of it like the stock market. So today it's NVIDIA and whatever nuclear company that Sam Altman started that's what the world is trading. 3 years from now, it's gonna be something else. 10 years ago, it was, Walmart and ExxonMobil, right? And so things change. You're just constantly trading. So the way we view our business is the actual platform itself is almost like the Bloomberg terminal. And so we're just giving you access to data, supply, financing, and logistics. So you could trade anything. So like we have people that want to sell and buy auto parts, roofing supplies, pool supplies. Like it's going to be everything you could trade. So it's a very different business. So from an investor standpoint, they go out and be like, oh, okay, this has an addressable market that we feel we can underwrite as much larger than, in the case of 5-4, a men's subscription box targeting a very specific demo at a very specific price point.
So how did you guys talk to investors in the sense that, how do you convince them to basically be like, this is the right thing?
Well, I think we're beyond that phase because that's like what happens at the seed round.
Okay.
And in the seed round, we had the luxury of two investors, one who I've known 15 years
Nahal.
and the other Josh, who've
Yeah.
known 15 years. So these things, like it does come from long-standing relationships.
No, but I get the early stage. I'm
Yeah.
saying, like, dude, you guys were on the NASDAQ or Times Square?
Yeah.
Where were you guys at?
Yeah.
Times Square.
I could break it down for you. So we'll go through each round and what the big takeaway is, right? So the seed is we have an idea,
See, just an idea.
right?
Seed
We have an
backing
idea.
human
You're
beings.
backing to you two.
That's
Correct.
it.
That's what I did.
Team and Tam, right?
Yeah.
Are we the right ones to do it? Is
Team
it big
Tam.
enough? Team Tam. There you go.
I think we should
Um,
clarify for the listener what TAM means.
All right. So TAM is total, like,
Total
market.
addressable market.
Yeah.
So how many
Like how big
potential
could it be?
audience members
And
are there
I'll
that would pay
actually,
for this product?
just jump in. Like, I've invested in 2 seed companies in the last 2 months, and it's just backing the founders.
We invested in one together, and that's
Yes.
exactly right. We sat down with the founder and said, is this the right person to figure it out?
Yeah.
So that's seed. When we raised our Series A, it was, all right, this can be a real business. We had early customers, we had traction, we had real revenue. We started to hire people. There was maybe 10 of us at the time, but it was going out to market saying, this is a real business opportunity. Now we need to invest in it. And then when we raised our Series B, it was a business that was working, and it was only working in a limited market, limited categories, and we needed to expand. And so that was last year when we expanded it to Europe. We expanded it to beauty and home goods. And
But the business had like so much momentum where if you were an aggressive investor that had a thesis in this space, and I also give credit, like every investor we worked with believed in this space also, not just us. So it people
At
have
every
to,
level?
yeah, every level they thought there was an opportunity somewhere in this world. They've been looking and they hadn't seen anything that had scale.
that's right. And then now with our Series C, what we're starting to do is mature as an organization. So what we're doing
Yeah,
is
no, you
really
kicked me out of my office.
that's
You got
correct.
booted?
Yeah, I got kicked out.
Anand finally got
I didn't
booted
come
out
in.
of his office.
Wow. That's
They
great.
fucked me.
I know. I guess that's a good sign.
End of an era.
Yeah.
So we are expanding.
There's some woman in there. I don't even know who she is.
I mean, where are you going to watch your Trump press conferences now?
You have 4 years.
I yearn for me and Pete
Right.
watching.
I know those were the days.
those were the days.
Yep.
Oh God. So, with the Series C, you really start to be beholden to certain metrics that are the underlying health of the business, right? So are your customers coming back every month, every quarter, every year? Are they spending more with you this year than they were last year? Are your teams all performing at the highest level? Your design team, your logistics team, your finance team. We started to bring in a C-suite. So we have promoted our head of engineering, Marco, to CTO. We now have a CFO for the first time. And we're starting to build what looks less like a startup every day and more like a pre-public company.
Yeah. So look, the real exciting thing is we're 3 years old. We're growing really fast. We have the world's largest consumer fund in the world investing in us,
Right.
which is L Catterton. And we have the head of the growth fund, Ian Friedman, as a board member. And Eric Donato is another partner there at L Catterton that are kind of leading the charge. And for those that don't know, L Catterton has investments in over 100 brands.
Mm-hmm.
So there's a lot of strategic partnership and learnings from having them as a partner.
Right.
And then historically, Catterton was like a very storied consumer fund, and they merged with L, which is LVMH's previous like private equity entity that they used to have. So it is a very strategic partner for what we are doing.
Right.
And for us to have someone like that at this stage is like really, really special and game changing for us,
Right.
because it really puts us in pole position to just put our heads down and execute. We're obviously well funded now. So, when we think about like where we sit today with our business, we have the ball, we're running extremely fast.
Right.
We could see the end zone, but you see people dropping balls all the time.
Right.
You see people getting tackled from
We've
behind.
talked about a lot of them on this podcast.
Yes. Yeah. Right. It happens all the time. So like right now, if we were to think about like, what are the biggest hurdles? It's really ourself. It's really execution risk that we get our head gets to ourselves and we don't follow through on what we're doing.
I don't know if you can tell me this. If you can't, totally fine.
Yeah.
But this is just for my own understanding. I think the listener will gain something from it. Is like, when it comes to you guys growing and hitting your marks and getting to where you want to go, what is there one like metric that is the most important? Like, is it onboarding the most?
This is a great
new
question
brands?
because each stage of the business, it's been different things.
Right.
So where we sit today, and I'm sure all of our investors are going to listen to this, so they'll appreciate it because we just had a conversation about this. So the key metrics in our business are GMV, which is gross merchandise volume. That's the total volume that goes through Ghost.
That is sold.
Then the next is our take rate, which is the commission, call it for the lack of a better word, of what the take is on the transactions of the GMV.
Transaction fees.
Transaction fees. Then, so that gets us our net revenue, right? And then after that, the next metric is gross margin.
Right.
Which is now become an obsession of ours because of the different stage we were at. Whereas a year ago, all we cared about, say 2 years ago, all we cared about was GMV.
Right.
Period.
Right.
A year ago, we started caring about GMV plus take rate.
Right.
Now we care about GMV, take rate, net revenue, and gross margin.
Right.
So it is the evolution that we are moving.
Right.
And a big reason why we've gotten all this senior leadership, there's a working capital opportunity with this business because there's a lot of money the seller needs and there's a lot of money the buyers want terms for. So that is something we're constantly trying to solve for. So that there's cost of capital that goes along with this. So there's so many metrics that we are now beholden to because of the scale at which we're growing. That, Josh and I jokingly say my initials are GM, gross margin. Right. Because that is like, I'm obsessed with it now. Right. And just to being transparent, 6 months ago, I didn't think about it once. Right. And now all I do is think about gross margin.
It's interesting how, like, I would say in most like growth oriented companies that those metrics, those key metrics change, evolve.
Yeah. And it's really tough on not only us, but it's also tough on your early staff, who were there, came in and they were hired to do one thing. And then a year later, like, no, we have to do this now. And then now we're like, no, we have to do this, and this. Where someone new is just being thrown into like the world today.
So is your number one goal right now, like if you could just, when you say like head down, you have the ball, just fucking run. Yeah. Is it like going around and signing up new brands and businesses to work with? It's to get that GMV up, obviously be lean as you can to help your margin or wherever that's coming from. But is it really like you just need to be signing people up?
So every stage of the funnel is very important right now. If we were to oversimplify it into the top funnel, the mid funnel, and the bottom. Top funnel is what you're describing, which is how many new buyers and sellers can we get into the platform? And so for us, the big change has been a shift from quantity to quality. So can we identify who the best brands are that have the most opportunity in our ecosystem? Can we identify the best buyers across different marketplaces or different retailers or different geographies of which will start buying, keep buying, and grow with us? The next stage, that mid funnel, is really, can we be the best in the world at matching supply with demand? And so that's an enormously complex data exercise. It is an operational lift. It is an enormous investment in user experience, right? Can we make sure that when buyers are logging in, they're seeing what they're looking for, right? They have all the information they need to make a decision. sellers have a very easy way to engage with these offers, engage with these buyers, and make sure that they can feel comfortable with the decisions that they're making.
Right.
And then the last piece is we are moving millions of units of goods around the world without touching them.
Mm-hmm.
That is an incredibly complex feat.
Mm-hmm.
And in order to do that, it requires what we call operational excellence.
Right.
And so our team is disciplined and focused on making sure that we can move that product seamlessly, effectively, and cost effectively.
Right.
more than anything
Right.
else.
I think the big thing is, you know, in marketplaces early on, you do a lot of things that don't scale
Right.
to create the network effect.
Right.
And then while you're doing that, you're quietly building the digital experience that give you all the leverage.
Yeah.
Like, you know, Uber today is an extremely efficient business.
Yeah.
I mean, think about it. It's, I think, a $200 billion company now.
Yeah.
It took them a while
Yeah.
of really understanding this like way to like acquire drivers, acquire riders,
Right.
and then finding all the business units. And what happened is a company like Uber got obsessed with the entire journey from signing up a driver,
Right.
getting them the car, getting them their phone, getting them paid,
Right.
getting in the car, getting out of the car, rating the car, and then tipping. Like they went crazy on obsessing over this experience. And then once you did that, you got the efficiency of scale.
I think would be helpful because you guys were already experienced before you guys started Ghost. So you guys have, 20 years, 15 years, whatever the number is. How do you convince investors that your product is worthwhile? And what's advice you would give to a founder? Because we have a lot of young kids that listen to this pod. And like, how do you convince them? Like, hey, this is what my vision is, and I'm going to make it.
Yeah, I mean, it's very complicated. The first is they don't back ideas when you're like starting out. They're really backing human beings. They back people. So why should they back you? It should come either from some education that makes you an expert in the space, perhaps experience. Maybe it's a great founding team that has experience in the relevant space. So like often it does come down to experience. It comes down to know-how and on why someone gets money, especially if you want to go down the route of getting money from a VC. VCs pattern match.
Yep.
And it works for them, right? Like they that's why like there's so many memes on the type of people they back. Stanford worked at Stripe. Boom, $5 million. You don't even have to. You don't even ask what they do. You just give them the money.
There's an AI company. It's the co-CEO of Salesforce and a senior Google, AI guy. $4 billion.
Yeah, I mean, because
They have no product.
yeah, but it's Brett Taylor. It's the Salesforce guy. Like, there's a good chance he figures it out.
And my
Like,
friend
it's working.
did it,
Right.
and my
Yeah,
friend
yeah.
funded it.
Right.
Yeah, and I think that's part of it is that for young people, because young people want to go get money from VCs. If that is your first go around, you have to have either been educated in what you're going after. You couldn't have been like, hey, I'm a philosophy major from Clemson and I want to go raise money for an AI startup in San Francisco. It's just not fucking happening. You have to have gone to Stanford if you want to go get money right out of college.
So, you guys are both seasoned entrepreneurs. What were the biggest no's you got? Meaning, what did people just say like, no, fuck you, we're not doing this?
I mean, it's very different. Like at the stage we're at today, if someone
No,
were
I'm
to
saying
pass,
like 2 years ago.
yeah. So 3
No.
years ago, yeah, and the most obvious was from particularly San Francisco, Silicon Valley based funds in our seed round did not understand this market and did not realize how big it was. Like they literally, like, for example, like there's this notion that like consumer businesses are not valuable or whatever,
Mm-hmm.
but that's complete nonsense.
Right.
There's so many successful consumer companies.
Right.
We could just walk down the grocery aisle, walk down Target or
Right,
Walmart.
right.
Those
So
are
how'd
all-
you convince them?
What?
How'd
We
you
didn't get
convince
money
them?
from any of those people. We got money from 2 New York funds.
Yeah.
One was ENIAC and one was Equal Ventures. Like they were like, no, we're backing the people. And we like that thesis and we're backing the people. You have to also go where people know your business. Like if Drama wants to go raise money, he should go to San Francisco to raise the money.
Right.
You get the money in New York.
Right.
Like his people who are going to understand Drama's business is going to be New York or LA, not San Francisco. Right. And I think we realized that quickly that San Francisco was not the place for us to raise money.
What's the difference between New York and San Francisco?
San Francisco is their pattern
They're
matching
just
for technology.
pedigree, right?
No. They're
want
looking
the
for
Stanford grad.
Just tunnel vision on technology.
It's very technical businesses, or at least what they perceive as technical. And anything that like you can make the argument, is Amazon a technology company or is it a retail business? Right.
Both.
Today,
Right.
it's considered.
It's both.
Both. But when it started, it was retail. Right? Like that's what it was. They sold books.
Right.
So I think like
I guess what's your biggest takeaway? Because you guys have been going at it for the last 3 years and dealing with Silicon Valley, New York venture. What's the difference?
So one thing I've learned now in the advanced stage of this business is that the number one quality that has made us successful as founders has been resilience. And I think that's the quality that is very difficult to evaluate for a seed stage company. And I look at our friends that have scaled great businesses. I look at our friends that have exited great businesses. And that seems to be the common thread that unites us all: resilience. Being able to fight when your back is against the wall, being able to lean in and get into the weeds when things start to break down. And, we in 3 years have not felt that every day has been easy.
not at all.
I would say quite the opposite. This is a very difficult business and a very complex business. And these checkpoints are really just an indication that we are moving directionally towards where we want to achieve our goal.
Yeah, far from the game over.
Correct.
Not even close.
And having that resilience has allowed us to adapt, which is really important. And as Dee mentioned in the beginning, our business is very different than it was the day that we started it. And it'll be very different 3 years from now. And what we're really focused on is making sure that, we can solve as many problems that come across our desk as we can.
So what would be good advice for a founder that's trying to raise money?
So there's this concept, a Japanese concept called the Ikigai philosophy, which if you're not familiar with it, it's basically picture like 4 circles in a Venn diagram. And the first of which is what you are uniquely passionate about. The next is what you are great at. And then what drives business value and what drives value for society. And I encourage many young founders that are trying to start a business to really think about those 4 groups and think, is your idea right in the middle for you as an individual? And if it is, then that's probably the right type of business you should be starting. But if it's not, then it's going to be very difficult for you to wake up every day, get punched in the face, and want to continue doing it. And I think that's where we're at today is like, we couldn't imagine ourselves doing anything differently, and we couldn't imagine doing anything else.
Yeah, no, that makes sense. Just as an investor, the way I've invested in, which has been very successful for me, is do you like the founders? And it doesn't matter what the idea is. Are they going to figure it out?
Dee has a great, the airport test.
Yeah.
Maybe you share that.
Yeah. So I've always said, and it really came from actually our fundraising process where one of the bankers clearly knew our business the best and we were going to select him, and he said something on the way out. He's like, you know what, man? I know it's like a close race right now. What I would do is pick the guy that if you got stuck at LaGuardia Airport with, and the flight got delayed, and you wanted to hang and have beers with him for the next 5 hours. And I was like, fuck, man, you aren't the guy.
That's funny.
And I think what I realized was, whether it's investors, employees, you end up spending more time with the people you work with than your family and friends. And so it's incredibly important that you pick people you work with that you really enjoy spending time with. And I spend, and Josh, a lot of time with our investors. And frankly, we enjoy it. It's really fun. They've all become very close friends. And I think that's very important. That has to feel mutual, and there's that mutual respect and admiration. But like, that is what, I didn't appreciate like what a great board meant or what company culture meant. Like, I think I was too young when I started 5-4 to appreciate and understand those things. And now I have such a deeper appreciation for it because I've kind of matured.
All right. What's next for Ghost? You guys are super rich. You got all these like big shot firms that are investing in you. LVMH. Like, can I get
L Catterton? Not
Catterton.
LVMH. L Catterton.
No, LVMH owns part of L Catterton. That's why the L is there.
Right, we gotta be specific when you're dealing with,
Yes.
Like, do I get a discount now? Or what's going on?
What's their discount? Are you buying something on the site?
Maybe.
on what, LV or M or H?
I don't know. I may
Some
want
Hennessy.
I may want a little purse.
What's next for Ghost is we go back in our cave and we get super focused, do not get distracted. And the difference between the fundraising environment today and 3 years ago, the fundraising environment is very limited for technology companies. It is not, if you follow all of the trades in this part of the industry, there's not a lot of activity, and there's not a lot of activity at the growth stage. So we are in an extremely privileged position to even be able to raise money and have great investors. So I think for us, we just have to focus on the business. We got to build technology, we got to build a great team, and then hopefully, the next 2-3 years, we have an incredible business. That's really what it is. And there's nothing else to get distracted by. One of the big things I would say, learnings from the last 20 years of being an entrepreneur, is the word focus. It is so easy to get distracted, right? Like, you just have to do one thing really fucking well, and you will have a successful company. I mean, like, just think about, you're thinking about Reckless. Like,
Right.
if we had just did t-shirts better than everyone else,
Right.
we may have been 10x bigger.
Right.
But we got distracted. Let's go make jeans. Let's go do this. Let's
Right.
go do that. Like,
Right.
you don't need to do too many other things.
Right.
And I think what we're realizing is just, you got to stay focused on why we started this business.
I actually want to give a quick tidbit. Nick Saban on my boy Pat McAfee's show.
Mm-hmm.
He said the 3 things that ruin a team. And this is why I love sports, because everything's applicable to everything in life. He said complacency, arrogance, and lack of focus. And he said, if you miss the first 2, you're already wrong on the third.
Right.
And I just love that, like, I don't know. It's just, sports is so amazing.
Yeah. It's interesting too. Like, I don't want to talk about this now. We can talk about it after you guys have some sort of big exit moment and you're free and clear. But like, keep in mind, don't answer it.
Yeah.
But like, I'm fascinated by, everyone wants to be their own boss, and everyone wants like no one to tell them what to do. But I think we've all learned too from the past that like sometimes having someone that you're accountable to pushes you in a different way.
Yes.
And I'm sure that I'm sure you guys lose sleep some nights because of the pressure of the people that you have breathing down your neck. But at the same time, I'm sure that when this is all over, you're going to, in a weird way, be grateful that you had that pressure, because it'll probably cause you to rise to a different standard, like you've already kind of mentioned. So once again, for your own sakes, don't answer it. But I'm just curious about it's sort of like everyone wants to be an entrepreneur. So let's just now shift that bucket. Not everyone will succeed in that. But even once you become an entrepreneur, there's multiple different ways to be an entrepreneur. And there's a lot of ways that you can do it where you truly have no boss and you do whatever the fuck you want. And then there's a lot of entrepreneurs that have a lot of bosses, like more bosses than your average employee. And the stakes are higher and it's way more serious. And I don't think people realize that. I think people think like, oh, I raised $100 million. Wow, you're rich. It must be nice. Now you can go do anything. But you have all of the pressure that comes with people handing you that $100 million that was theirs. So anyway, I'm just fascinated by, we've all done kind of the different ways of doing it. From, you've told the story many times of maxing out credit cards to fund 5-4 and things like that. You guys are now in a different ballpark with a lot of pressure but a potential really big reward and a lot of support also. And it's just fascinating to see the different styles.
I won't get into the details of it, but the last 3 years has been fucking hard.
Right. I'm sure.
Like no sleep.
Right.
I wake up 5 days a week, panic sweats.
Right.
I'm on a plane every single week.
Yeah.
And I've never worked harder than I've ever in my life. And it is because we know what happens if you do not execute. Like there's no ego in this business because it got sailed years ago.
Right.
You know, when you get crushed,
right.
your ego, like think about Drama Young and Reckless versus Winner's Drama.
Right. It's
a different human being.
Completely different.
Right. And so I think for myself, that is like, I'm
Chris now, by the way.
Chris, sorry. Does you even change your name?
I'm totally kidding.
But like, you know, like
you're still Drama to me.
I'm just kidding. I'm kidding. I'll always be Drama.
What happens is like, I'm so fucking anxious.
Right.
I'm walking on eggshells, just to be honest. Like not a day, we can't even celebrate. There's no celebration.
But look, I'm curious. Here's just once again, there's no answer. We don't need to answer. If you look at any great athlete, to use Anand's sports analogy, they usually credit a coach or a dad or someone that also made, like, I don't know that you really get pushed to your full potential unless you go through the feelings that you guys are having today. I don't know that anyone on earth truly does that of their own accord.
No.
Do you guys have a Nick Saban?
Yeah, it's our board.
No, but like, who's a Nick Saban?
It's our board.
No, but I mean, there's a lot of people in the board.
But Nick Saban is like a thing, right? Not just a human being. It's someone that's holding you accountable. So we have this incredible board that is pushing us and holding us accountable, but also loving us when we fuck up.
And they're empathetic.
Oh yeah.
You guys don't do well.
Do you think that the last 3 years hasn't been up and to the right straight? We fucked up.
Right.
It's not a smooth ride.
It's just fascinating. It goes back to something we've talked about on this podcast a lot, which is like American exceptionalism, participation trophies. It's just interesting. When I look at you guys from my vantage point, like I am not envious of the pressure and like the accountability, but at the same time, I do recognize that you guys will hopefully accomplish something due to partly that pressure that will be really awesome. I think the actual really cool thing that we'll do more on this podcast with you guys is like a lot of times, like on this pod, we either like celebrate or make fun of or whatever people who like have already exited or like have an IPO or like in the case where like Peloton, right? But we don't talk a lot to people on the journey of doing that. And I think that it really ties in with our comments about how hard you have to fucking work. Like, I think if we talk to anyone who's hoping to go public or have something like that happen, for us to be able to joke about them on group chat in the next 5 years, probably feels the same way you guys do. Like, I don't know that there's a way to not feel that way, not be on a plane every week, not be, and it's just interesting to see. There's the celebrations of like, wow, you just raised all this money. That's amazing. The press release makes it look, everyone envies
Everyone's
you.
happy.
Everyone thinks, oh my God, it's amazing for them. And then we also see, that you'll record group chat and then go jump on a flight or be exhausted or whatever. I personally have a last question. If there's any other last questions.
You can end it on this.
Has group chat in any way affected your fundraising process, positive or negative? Has anyone
Positive.
said like, hey, Dee, we love you and we're going to go ahead and give you this money, but you need to pipe the fuck down in that group chat?
So a lot of positive.
Okay.
Like
the investor, you met investors that know
a lot of
it.
introductions, a lot of customer intros, a lot of
Kathy's have
employment.
been really helpful for Ghost, to be honest.
Yeah, and a lot of our employees came from the pod.
Right. But nobody has made a note.
There has been. I've gotten text on the side. He goes, "Hey, someone at the firm listened and said you said something about this.
Right.
Is that how you really feel?" Like, oh yes, that is actually
Okay,
how
so
I
it
really
has come
feel.
up. That's interesting. But not to the point where you feel like you have to chill.
No, and to be fair, if you listen to this podcast since the beginning,
Right.
I've chilled dramatically
Right.
since starting this company.
Right.
Because
I would question that.
no, but like you may not like
Yeah,
my
if you
like
listen to old
political
episodes,
views.
yeah.
That's different.
Yeah.
But like I'm way more careful with certain things and certain topics.
I don't know. You always shit on me, so
Well, yeah, I
Yeah,
mean,
but the investors don't seem to care about
yeah,
that.
they clearly don't care.
They have no notes.
they don't want to care about one of the greatest
Right.
angel
That's what they
investors
said.
of all time.
That's what they said. Okay, so really all positive.
Positive. It's exciting. It's a lot of work, and it's funny is that I would tell you that if you're ever in this position, I'd love to hear from another person, but I didn't feel anything.
When you raise the money?
No,
Right.
like I actually cried
Right.
because it was relief,
Right.
but like you know how like if this had happened to me 15 years ago,
Right.
I've been on a plane to Miami.
Right.
I'd be at 11
Right.
popping bottles.
But you also would have wasted those investors' money
Yeah.
and that company wouldn't have worked.
Yeah. I think
I think
I had, you know what, when we closed the round, I ordered Taco Bell
Yeah. Nice.
and I poured myself a Lo Siento and
Yeah.
sat at my dining table by myself and ate.
Right.
so. I'll tell you a similar story.
I think that's real. That's
No, but what's actually important to note about that, when the couple positions I have that went public that changed my life, I ran in Manhattan Beach. I dropped my son off, Mav, at El Segundo at Napa Center for his preschool. And I ran, and everyone's texting me, and I just watched the stock.
Mhm.
And I was like, all right, whatever, who cares?
Right, but that's also a different moment. Like I would imagine if you guys had like an IPO moment or something like
that
It
that.
was an IPO.
Yeah. Yeah,
No,
but
I'm
like
talking about
you,
them.
if you
They're not at the
created,
finish. That's your finish line.
Yeah.
They just got a water on they're still halfway through the marathon.
yeah.
And I do think probably you would feel different if you had that like finish
Yeah,
line
I think
moment.
to me personally.
You'd be in Miami. You'd be on a plane to Miami.
Yeah. But that would be like a serious inflection point that
Right.
I've never been able to hit.
Right.
So I would celebrate that.
Right.
Like
I actually think you wouldn't, to be honest.
I would.
Even if you guys exited for like 10 billion, whatever the number is, like, I actually don't think you would.
I would hope.
I know
would.
you.
10 billion maybe.
10 billion deserves more than Taco Bell.
I'll just do snow angels in the sand and I'll bring snow.
Right. That deserves more than Taco Bell and Lo Siento at home. Maybe at the club.
Yeah.
11.
I
It
don't
could
know.
have been a COVID thing too.
What?
Meaning, like, I didn't care.
Right.
Yeah, we'll see.
Yeah, we'll see. I think that they are not. This is far. I mean,
We have such a long way to go.
it's also like you learn, especially as you get older. To me, it sounds kind of like when a young person like signs a record deal and goes and celebrates. Like you just got yourself in a lot of debt.
Yeah.
That's not your money. And I think you guys are like old and wise enough now to know that that's not your money.
No.
That money comes with responsibility and someone asking where it is and why you haven't given them twice as much
it
back.
It comes with a lot of accountability.
Right.
A lot of pressure. It comes with very high expectations.
Right.
You know,
It's more like if you're driving to Vegas, you don't celebrate when you fill up your gas tank. You know what I'm saying?
or when you pull the money out of the ATM.
Right.
That's basically
Right. You're not there
the
yet.
exact opposite of that is when we got that order from PacSun.
Right.
and the three of us, me, Dee, and Drama,
Yeah.
went to Vegas.
But I mean, the funnest. I mean,
Yeah.
that's like when people like look back and say, man, I miss being a kid when I had no responsibilities. Like that
That
was
was
like,
fun.
oh, it was so fun. I would give anything to be that ignorant again.
Oh, yeah.
You know? Okay. Should we wrap it with some YouTube?
Do a quick comments.
Okay. So just a friendly reminder, group chat news over on YouTube. And here's some of our favorite comments, top comments.
I actually have a comment. Deion Sanders, Coach Prime,
Yeah.
he brought a kid out that was getting bullied. I think he was like 12 years old.
Mm-hmm.
And he said, look, I don't tolerate this. He brought him in front of the entire team.
Uh-huh.
And he goes, I need players to come and go to the school. And we're going to stop this.
That's cool.
Oh, that's cool. Well, online or on, you saw it on TikTok or
TikTok.
something?
Yeah,
Right,
yeah.
right,
And like Shedeur Sanders, Travis Hunter, they all went, the stars.
right.
And they went to the school and said, like, this is our guy.
Yeah.
Like, stop this shit.
Yeah.
Yeah.
Shout out to Prime.
Coach Prime.
Okay, what do we got?
First one from Ashley Chatterton, 6190.
Group Chatterton.
Great episode as always. Now that Diaz raised a new round, is he going to finally get his wallet out?
No chance. That thing's
The least
long gone.
he could do is pay his friend back the $20 he stole to jump the valley line. He could pay it back with compound interest. Absolutely not.
No, he's going to be cheaper than ever until the real payday.
Yeah. We haven't made any money yet.
Right.
Next up, great episode with just you two.
Thank you. That's me and Anand.
That's from Niraj. Congrats to Dee for the new raise, but the real winner of the week was us, the listener, because Zach wasn't on the pod.
What the
Wow.
fuck? Why is Zach so polarizing?
I get a lot of like positive, like
I get
I
nonstop
thought everyone
positive.
loves Zach.
They do, but
Yeah.
there's like a few Zach
Yeah.
haters.
I only hear great
I know.
feedback about
Yeah.
Zach on
I
the
just
pod.
I don't feel like Zach's a very like I don't know. I don't get
He's
it.
pretty down the middle.
I know. I don't get how some people don't like him.
all right.
It's weird that they like us.
I don't know that they do. They might be
Maybe they
hate
don't.
listening, right?
All right, from Chris. I would love to
Okay.
give a shout out to Brian Dano. We have both been listeners of the pod for a few years now and talk about the episodes weekly. He has wasted thousands of dollars buying shit coins per Anand's not financial advice, but we still love you guys. And it's his birthday today, October 17th. So big shout out to you, Sprinkle. Interesting nickname.
Hey,
That's
Chris,
very interesting.
Wish you were in LA to celebrate with us.
Chris, I never have advocated shitcoins.
Yeah, I don't
Okay.
think we've ever advocated shitcoins.
From Joseph, happy birthday to my amazing wife, Julie, who turned 24 this weekend. You're officially in your mid-20s, and I love you. Wow.
Wow,
young love.
young love, young
like that.
commitment. Good for you guys.
Next is from Jackie Martinez. Shout out to Anand for the Delilah Vegas Res.
Wow.
Lived up to the hype, and food, drink were fantastic. Much love and gratitude.
Illuminati, man.
Yeah.
They make things happen.
Yeah, that's what's happening. It's happening at
And
Delilah.
happy birthday, Eric Weiss.
Oh,
Yesterday.
yes.
Happy
You guys
birthday,
are all
Eric.
close with him. Happy birthday, Eric Weiss.
Yep.
Big happy birthday.
All right. That's it. D. Josh, congratulations.
Thank you.
Here's to more, head down sprinting. Can't wait to do one of these when you cross that true finish line.
And I hope
This
you
is
guys get
fucking
some
great.
sleep.
And
Yeah.
I hope you get some sleep, but I don't blame you if you don't for the next 2 years.
To
Yeah.
paraphrase the late, great Kobe Bryant,
Yes.
job's not finished.
There you go. That's right. Well said. That's
not
it. Everyone
finished.
have a great week. Thank you for listening, and we will see you Wednesday.